We're here at the 2016 Vancouver Resource Investment Conference, and joining us today is one of the greatest entrepreneurs and business builders the mining industry has ever seen. He's the former founder of the gold-producing giant Goldcorp, and he's now built his second company, McEwen Mining, which is a precious metals producer in the Americas. Ladies and gentlemen, Rob McEwen.
Thank you, Andrew.
Rob, thanks for taking the time to speak with us today.
Pleasure to be here.
I thought it'd be a good time to do a recap of 2015 as we just started the new year. So you please touch on some highlights that McEwen Mining had.
2015 was a really good year for us. Our production went up, our costs went down, our free cash flow increased, and our treasury increased year over year.
Excellent.
We have no debt, and we're in a great position to go forward.
That's something also I wanted to talk to you about, cost containment and debt levels. It's a big focus in the mining industry right now. So what is McEwen Mining doing to lower its all-in sustaining costs?
Well, it's twofold. One is trying to, like everybody else, rationalize their costs, negotiating with their contractors, trying to get better deals on the materials we have, the consumables. But at the same time, looking at our process and how do we put automation in there? How do we put wireless devices in our crushing plant? Look at our heap leach. We're experimenting with that to find out what's happening in the heap, like compaction and temperature and saturation. And can we, if you crush it and it's you're getting 70%, you're leaving 30% on the pad.
Yeah.
So it's trying to say, how can we maximize the revenue from what we're mining?
Excellent.
And then just playing with innovation. I think big data is going to fall into this business
Of course.
in a fast way.
Now there's also been a big focus on debt levels. A lot of major mining companies are facing astronomical debt levels. You've been a big believer in having no debt to minimal amounts of debt on your balance sheet. So what advice would you give to leveraged up mining companies, why they should reduce their levels or why they shouldn't be leveraged on debt, especially in a price environment like this?
In a price environment like this, they know why they shouldn't have much debt. I mean, they're just getting crushed with the margins where they are. I don't know. I mean, everybody's trying to, the big guys are selling their assets and they're trying to pay down their debt. Creates opportunities for middle and smaller companies. So keep doing what they're doing and they'll reinvigorate the industry.
Good to know. So one of my other favorite financial concepts you often talk about is free cash flow. Why is free cash flow so important in a market environment like this?
You can't do anything without it. In this type of market, if you're not generating positive cash flow, free cash flow, you can't develop new projects easily. You might not be able to sustain yourself. You're chewing into your capital and your prospects are being abbreviated.
So as one of the other things I wanted to talk about is potential acquisitions going forward. I noticed on your last set of financial statements you had $18.5 million in free cash flow. Your treasury is well stocked up. So what do you have your eye on right now in the marketplace? What can you tell us?
Well, there are a lot of things we're looking at, but there's a lot of problems still out there. Some people have sold metal streams, and so they've given away part of their future. Some people have even hedged again, or sold the royalty. And then, as you said, there's the debt levels. And so you're looking and saying, is there a good company out there that doesn't have those aspects and that the investor has as much of the upside in a higher price environment? So that's the question looking for. We're trying to grow organically as well. We purchased a couple of properties adjoining where our deposits are, and we think we'll be able to extend the life of the mines that we have there. And it's just some consolidation I think is going to happen. I mean, our goal is to get into the S&P 500, so we have to have good organic growth and then some M&A to make it.
All right. Well, hopefully with the new appointment of Colin Sutherland, your new president, you'll be able to help with that. Can you tell me a little bit about him and why you saw him as a good fit to run your company?
Colin's he has a financial background, CA, tax accountant, so lots of detail. He's worked with a number of gold mining companies, both in Canada, Mexico, and more recently he was the CEO of a company called Archipelago that was in Indonesia. And they were doing about 200,000 ounces of gold and they increased their production. So he's in Singapore. We were looking for a new president. He came along and said, I like what you're doing. I think we can grow it. I'd like to make an investment. So he bought 460,000 shares before joining us. And I really like people who put their money where their mouth is.
Just like yourself, what is your share ownership again in the company?
It's 25%. It's a cost base of $127 million.
So I don't think any interview would be complete with you if we didn't touch upon your legendary gold forecast. Are you still calling for $5,000 gold, and if so, why?
I do. I think all the reasons we've said before, massive amounts of debt at a government level and corporate level, and incurred now, and it's short in duration, and the coupon is low right now, and if interest rates start going up, the ability to service is going to become more difficult. And also monetary expansion. You look at economic history and just say, there isn't a precedent for this. We've seen single countries expand their money supply to the degree that the West has done, but never the whole industrialized world going this way.
All right. So going forward in 2016, what can investors look forward to, and what kind of catalysts will the company be having?
Well, I'd like to say, we've outperformed a lot of the companies in the last year. And too many people in the gold space are focused on the US dollar price of gold. And they're missing the point that anybody in other currencies, Canadian, South African, Australian, they're starting to see their revenues much higher. Like the gold price is about 25% off its high, rather than 45% off its high. 25% off on Australian and Canadian dollar terms. So in the next couple of quarters, I think you're going to see stronger cash flow and earnings appearing, and people are going to say, where's that coming from? Now, the other day I was visiting with a money manager, and we visited with last July, and then just on Friday, and between July 23rd and January 22nd, our stock was up 80% in Canadian dollar terms. So, and our story isn't unique. There are other stories out there where people are just looking at gold and saying it's not moving because they're focused on the US dollar price. But if you look, there's some movements occurring right now, and once the market, the broad market, starts thinking you can make money here, and we just have to link a couple of more performances like that, they're going to be in here in droves. And I think prices are going to rise quite substantially.
Excellent. All right, folks, so you've heard it from Rob McEwen. This company, the management team is working to lower its all-in sustaining costs. They're generating free cash flow. The company has no debt right now. They've just appointed a new president, Colin Sutherland, who has a track record of success in the industry. And Rob McEwen, of course, is still calling for $5,000 gold. Thanks for watching, and Rob, thanks for your time.
Thanks, Andrew.